And here's the big thing, 100% expensing. In general, Section 168K is amended in paragraph 1A by striking the applicable percentage and inserting 100%. So if we go to 168K, paragraph 1A, and the depreciation deduction provided by Section 167A for the taxable year in which such property is placed in service shall include an allowance equal to 100% of the adjusted basis of the qualified property. Oh, so they've already updated this, which is good. Okay, so an allowance equal to 100% of the adjusted basis. So adjusted basis is, in most 99% of cases, is just going to be the cost of the thing. So basically, what this does is it allows for assets to be 100% depreciated. And for 2025, we have a transition rule here, which is what it's talking about here. And it's talking about how in 2025, under the Tax Cut and Jobs Act, we were set to have a 40% special or bonus depreciation rate. And if for assets that were in the taxable year ending after January 19th, 2025, because January 20th was the inauguration of the new administration, then those are going to apply for 100%. So if you bought assets between January 1st and January 19th of 2025, you're still stuck in this 40% window. But if January 20th through December 31st of 25, you get the 100%. Okay, and same thing with plants and everything. Plants are funny. We've had some agricultural clients that there's special kind of inventory rules with generally accepted accounting principles, which is GAAP, and how that applies to taxes. It gets weird. Okay. Effectively, what Section 70301 does is it brings the 100% depreciation back for pretty much all assets, excluding real estate. And even some real estate, there's special categories, which we'll get into another video. And what's the upshot of this? The upshot of this is that it allows for people's spending to be in line with their tax. And